multiple predictions for the future of crypto in 2023, which were published on an online popular crypto news website. Today I will share with you. What does the next year hold for crypto? We've rounded up predictions from smart people in the space, from the bullish to the skeptical. Think back to 1 year ago. Bitcoin traded at around $50,000, you couldn't watch sports without seeing a crypto advertisement, and you could get rich, or at least it felt that way, by minting a non-fungible token, NFT, of your left nostril. At the time, who could have predicted the collapse of Celsius Network and Voyager Digital? Or that Matt Damon would become a crypto punchline? Or that the space's golden child, Sam Bankman-Fried, would turn from Anakin Skywalker to Darth Vader? This is all preamble to say that there are no crystal balls. Predictions are often wrong. Trends can change on a dime. But then again, perhaps after the FTX-flavored gloom of the last 2 months, speculating on 2023 is exactly what we need to cleanse the palate. As we enter 2023, what happens with crypto funding in Q1 will be critical as to whether we stay in a sustained bear market, suspects Jamie Burke, CEO and founder of Outlier Ventures. On the one hand, he notes that the strength of the venture market has persisted, with billions of funding still pouring into the space and high levels of capital waiting to be deployed, and that we have seen a record number of applications in our most recent cohorts for 2022. Then again, Burke acknowledges that the venture landscape is undeniably changing, and that fund managers going into 2023 are conserving capital instead of a bull-run strategy of spray and pray. He predicts that next year many investors will double down on existing, less risky investments from later-stage companies already showing growth. As to what that could mean for the space at large, or how else crypto might twist and turn in 2023, we've rounded up predictions from smart people in the space, from the bullish to the skeptical. 1. Epic battles over regulation. The exact outcome is anyone's guess, but 2023 could be the year where the clashes of overregulation finally reach their climax. There's going to be harsh crypto regulation proposed and an epic battle by the community to fight the parts of it that threaten decentralization, says Laura Shin, host of the Unchained podcast. 2. Web3 platforms continue to grow. Larger macro downturn market conditions should hopefully shift crypto projects away from speculation and more towards utility, one major utility category simply being meaningful, fun, social experiences, predicts Alex Zhang, the de facto head of Friends with Benefits DAO. He expects this to translate to more meaningful Web3 social platforms and protocols, and foresees growth in interoperable identity, on-chain social graphs, and crypto-abstracted social experiences. And for a less optimistic take, 3. More bleeding, more losses, more pain. The contagion isn't anywhere close to over, says Cass Piancy, co-host of the Crypto Critics Corner podcast. Piancy says that companies, banks and funds are desperately hoping the market moves past the FTX and Alameda collapse or strictly focuses on their malfeasance. But whether people like it or not, you can't wish away a credit crunch and exposure to bad counterparties. We will see the closure of funds and the faltering of companies we didn't expect, mostly simply due to the fact that the contagion is too vast and too difficult for us all to quantify. 4. Truly global Bitcoin adoption. When I spoke with Alex Gladstein, Chief Strategy Officer of Human Rights Foundation, he had just returned from a Bitcoin conference in Ghana. I was blown away, says Gladstein. I was staggered by the number of Bitcoin entrepreneurs and leaders from so many different countries. He met people from rural Cameroon, from Democratic Republic of the Congo, from Somalia, from conflict zones. They're all just building on Bitcoin. It's legitimately amazing, he says, which is why he believes that global adoption is probably the #1 story for next year. 5. Maybe a focus on life outside of crypto Bitcoin blockchain. When asked for his 2023 predictions, the Bitcoin mega bull Peter McCormack, host of What Bitcoin Did podcast, replied simply, "Real Bedford will win the league." Obviously this is a cheeky joke. McCormack purchased the team in 2021, but this might contain the kernel of a deeper truth. For many in the space, during crypto winter it's useful, even healthy, to focus on other interests. 6. Web3 gets fashionable. Fashion will continue to lead the way when it comes to Web3 adoption, says Kathy Hackle, Chief Metaverse Officer at Journey. We will see further collaborations between Web3 personalities and consumer and luxury brands that want to explore new commerce models and customer touchpoints. Hackle's bonus prediction, with the rise of generative AI, we might see blockchain play a significant role in helping us to distinguish between content created by AI and content created by humans. 7. Don't count out NFTs. The sustained high-risk appetite in NFT funding in 2022 is a strong indicator that it will be one of the first sectors to recover next year, says Burke. Throughout the past year, We were already beginning to see major NFT investments from major Web 2 brands, Starbucks and Disney, and across Web 3. This shows no sign of stopping in 2023. Brands will continue to flock to NFTs. 8. Gaming and DAOs continue to grow. Burke is similarly bullish on gaming, as prominent Web3 game titles that have been in development for quite some time, including Big Time, Star Atlas, Ember Sword, will finally see the light of day in 2023, either as full-fledged games or more playable demos. As for decentralized autonomous organizations, DAO, although it may seem that the current bear market has forced the industry to hit pause, the growth of new DAOs has accelerated exponentially, with each month in 2022 producing more new DAOs than 2021 witnessed altogether, says Burke. 9. The big exchanges become disaggregated. Exchange stack gets disaggregated. We see custody, brokerage, and exchange price discovery get broken out into different players, just like in traditional finance. This makes it impossible for another FTX to happen, says Hasib Qureshi, managing partner at Dragonfly Capital. Then Qureshi offers a parallel prediction: when trust is low, incumbents consolidate. Coinbase, Binance, Uniswap will likely gain market share in aggregate, as people are less likely to trust smaller and weaker players. Network effects get stronger. And finally, 10. The space regroups. Read the room and assess the damage, says Sandra Rowe, CEO of the Global Blockchain Business Council, who then gives a bit of advice for the space at large. Regroup with humility, rebuild with integrity, regain trust, rise again. Another report published by Cointelegraph is 10 predictions for crypto in 2023. Expect blockchain adoption to increase in the year ahead, in addition to the culture wars surrounding it. This year has been a particularly tumultuous one for the crypto market, with many decentralized and centralized entities failing or struggling to stay afloat. It feels as though we are in the final stages of the bear market, with bad actors and practices being purged in a process that is both dramatic and necessary for the maturity of the entire system. Despite this, the Web3 technologies that emerge from this crypto winter will change everything. Web3 represents the next evolution of information exchange, with similarities to the transformation from a largely agricultural society to a more industrial one. It is a computing fabric that is designed to put humans at the very center and prioritizes privacy. Blockchain technology will bring about a new way of interacting with the internet and will fundamentally change how we engage with each other. As we move into the future, here are some predictions for what we can expect to see on the other side in 2023. 1. Crypto venture capital funding will continue to decline through the first half of 2023, but that is not necessarily a bad thing. Rather, it is normalizing to a point that is rational. Investors don't want to catch a falling knife, so they are waiting for things to bottom out while also weighing broader macroeconomic concerns and the global recession risk. At the same time, new settlements, Layer 1s, 2s, interoperability, Layer 0 bridge, lending and trading protocols will continue to get funded to fill the vacuum resulting from the changes resulting from the recent hacks, treasury shortfalls, regulatory changes, and exchange collapse. 2. In 2023, the initial Web3 anarchist ethos that rejected the need for big brands will go away. Participants will finally realize that when there is no outside money from big brands, then all you have is a token whose only value comes from user and speculator dollars. Instead, projects will embrace large brands and the ad, marketing and sponsor dollars they bring so that the dream of Web3, token representing microequity, can be achieved via divvying up meaningful outside capital among actual users. Web2 brands such as Nike, Starbucks, and Meta will continue to experiment in Web3, with a continued focus on non-fungible tokens (NFTs) as the preferred format, and with an emphasis on customer acquisition and engagement over monetization. 3. People will realize that the way many have been thinking about community in Web3 is bullshit. Community was often simply a lovely word used primarily to describe a bunch of speculators in a Discord sharing a common dream of rapid wealth who abandon the project once the growth carousel stops moving. While we'll continue to see exceptions to the rule such as strong, engaged decentralized finance communities, as well as online to offline decentralized autonomous organizations like Lynx DAO, what we'll realize in 2023 is that the whole Web3 ideal of project community fit was frequently just project speculator fit. So, we can't afford to ignore the fundamentals of actual product market fit. 4. As Web3 app development costs go down and user acquisition costs go up, there will be an emphasis on quality and discovery. Web3 will have its app store and ad mode moments, which will help developers and users find each other more efficiently. L1s and wallets will initially compete for this position, but a new player will likely take over. Breakout Web3 apps in 2023 will look more like the top downloaded and top grossing apps in the early days of mobile, simple user experience and graphics with intuitive but innovative engagement and monetization mechanisms, like Angry Birds in 2009. 5. The current trend towards stability and sustainability in games, in some ways resulting from the bumps of Axie Infinity, will spawn a wave of products with built-in stability but that lack the dynamic boom and bust nature of most crypto speculation. This will create a flat, muted player experience, which just feels like a copycat version of existing Web2 video games. Over time, game developers will relearn that market speculation is part of the fun and try to incorporate it in healthy, responsible ways. 6. Web3 will continue to offer a solid niche, with apps that are functionally clones of existing businesses, but with some basic blockchain components. These apps will carve out a market niche of users who want that same traditional core product offering but have some affinity for Web3, similar to many early internet companies, such as Amazon as a web bookstore or mobile companies, such as Robinhood as a mobile stock trader. They will differentiate largely on marketing and experience rather than on core product offering. A few of them will take moonshot bets at truly paradigm-breaking innovation, a la Amazon. 7. To deal with compliance costs and overhead, blockchain apps will increasingly rely on existing, large capitalization tokens to power token-related mechanisms. Ethereum will continue to delay its roadmap in 2023, but once it does eventually ship sharding to reduce gas fees, alternative L1s will see a big drop-off in interest. 8. Stablecoins will find more use cases outside of crypto capital markets, which will drive more mainstream adoption, primarily among businesses, and innovation within Web3. Governments and private blockchain research and development will continue, with some announcing centralized public infrastructure like central bank digital currencies or marketplace infrastructure. 9. Culture wars around crypto will heat up toward the end of 2023, leading into the United States election cycle. Booms and busts will continue with accidental hacks, like Wormhole, over aggressive risk exposure, like Terra, and outright fraud, like Safe Moon. More politicians will take strong stances on crypto. However, the U.S. government will continue to be indecisive on regulation, to the detriment of the domestic industry. Any regulation that does emerge will be patchwork and could still allow risky projects to slip through the cracks. 10. As builders develop through the bear market, there will be a point in 2023 when new growth areas start emerging beyond existing prevailing narratives like NFT profile picture projects, play-to-earn projects, alternative L1s, etc. The new narratives will propel the next cycle, and hopefully, these fresh frameworks will drive real consumer utility and adoption, bringing in several hundred million new crypto users' wallets. The uncertainties of the future also represent opportunities, and those who are able to adapt quickly stand to benefit if significant changes do occur. Crypto adoption in 2022, what events moved the industry forward? While the crypto market in 2022 was hit by a slew of insolvencies and daily volatility, adoption seems to have continued apace on the global level. It's no secret that the crypto market was gripped by bearish pressure for the entirety of 2022. However, amid all the volatility and chaos, many positive news stories appeared as well, especially regarding the global adoption of digital assets and crypto-related technologies in general. Looking back at 2022, here are some key adoption-related events that helped drive the industry last year. Polygon accrues 200 million addresses despite challenging 2022. Even though an era of financial uncertainty has shrouded the crypto market since the end of 2021, Polygon, a Layer 2 scaling solution running alongside the Ethereum blockchain, allowing for speedy transactions and low fees, continued to witness a lot of growth in 2022. To this point, the network's unique address count recently surpassed the 200 million mark, reaching a new all-time high of 205,420,908 on December 31. Additionally, the Polygon ecosystem saw its unique address count surge by a whopping 8,783,568 between December 1 and December 31, suggesting that over the last month of 2022 alone, average of 283,340 new Polygon-related network addresses came into existence daily. Moreover, it bears mentioning that the number of transactions taking place within the network has continued to hover around the 3 million mark. Lastly, the Proof-of-Stake project recently announced the release of its final testnet, an improved iteration of its zero-knowledge Ethereum virtual machine. Major brands continue to enter the Web3 arena. The non-fungible token (NFT) market and the Metaverse industry have continued to pique the interest of several fashion and luxury brands. For example, in October, Rolex, a popular watch matchmaker with a global presence, filed for multiple NFT-related trademarks in addition to one for a cryptocurrency exchange. Popular sporting goods giants such as Reebok, Nike and Adidas also made similar moves. Nike launched a metaverse venture called Swoosh, a Web3-enabled platform where customers can buy and sell virtual products. The platform will reportedly initially look at community building while hosting the launch of the company's first virtual collection, comprising footwear, apparel, and accessories, sometime during January 2023. Upon its launch, the platform will only allow the use of cash, not digital currencies, with all transactions recorded on the Polygon blockchain. Adidas released a new line of virtual gear last year along with a picture-for-proof dressing tool allowing avatars from compatible partner collections, such as Bored Ape Yacht Club, to be dressed up with their gear. Reebok filed numerous trademark applications in the United States for a wide range of virtual apparel, including footwear, headwear, and sports equipment. Lastly, luxury car manufacturer BMW announced that it, too, had decided to enter the metaverse fray by applying for a trademark for its logo that will be used in relation to its upcoming virtual vehicles, digital retail, and other related services. Total volume of staked Ether continues to grow. Throughout 2022, the total volume of Ether locked within the Ethereum ecosystem has continued to climb steadily. Between February and June, the amount of staked ETH rose from just over 9 million to nearly 13 million. As seen from the chart below, the trend plateaued between June and September, only to muster steam once again around mid-September, just before Ethereum's much-awaited transition to proof of stake. Within the context of the Ethereum network, staking refers to the act of depositing 32 ETH into the network, which allows individuals to accrue validator rights and affords them the ability to earn additional ETH. As a validator, users must perform several duties, such as storing data, processing transactions, and adding new blocks to the blockchain to help protect the network for all participants. Meta integrates support for NFTs. Earlier in May, social media behemoth Instagram revealed its testing program for sharing NFTs for select users across the United States. At the time, a representative for the firm stated that it would create more monetization opportunities for influencers on the platform while introducing NFTs to a larger customer base. A few months later, in August, Instagram decided to expand its NFT operations to over 100 countries across Africa, North America, and Asia. Meta also announced that it would integrate support for third-party projects, including Coinbase Wallet and Dapper Wallet, while extending its NFT offerings to its other core social media platform, Facebook. In November, Instagram's development team announced that it was testing the ability to mint and sell NFTs with a select group of digital creators. The feature will go live on the Polygon network, with creators and collectors not having to shell out any gas fees initially. Starbucks' blockchain-based loyalty program goes live. Starbucks announced the launch of its blockchain-based loyalty program and NFT community, Starbucks Odyssey, to a group of testers in the United States in September. The initiative builds upon the company's existing loyalty program but uses a decentralized structure built atop the Polygon blockchain. Starbucks Odyssey is a rewards program that allows users to earn perks and whose scope extends beyond the realm of simply earning free drinks. Odyssey allows customers to interact with a wide array of game-style offerings, allowing them to earn NFTs, referred to as journey stamps, in the process. These assets can later be traded and redeemed. VCs continue to pour money into the Web3 ecosystem. During Q4 2022, Animoca Brands, the firm behind several successful crypto projects, including The Sandbox, created a multi-million-dollar fund to invest in various metaverse projects. According to Animoca co-founder Yat Siu, the fund will spur the utility of the metaverse and blockchain gaming market. More people are joining crypto every day, especially in gaming, he stated, adding, "I'm hoping that this will also drive a scenario where the digital property will be recognized like physical property in the legal system." In addition to Animoca, other popular firms that have invested heavily in the burgeoning metaverse economy include South Korean venture capital giant Daesung Private Equity. The company recently announced that it had allocated a total of 110 South Korean won, $83.9 million, toward its metaverse-centric fund. JP Morgan partners with Ripple. American banking giant JP Morgan Chase joined with core Ripple partner Al Fardan Exchange in 2022 in an effort to provide users across the United Arab Emirates access to faster transaction settlement and transfer services. Al Fardan's clients will be able to conduct crypto transactions via several popular fiat assets, including the US dollar, British pound, and euro. It is worth highlighting that this partnership comes amid Ripple's ongoing lawsuit with the United States Securities and Exchange Commission. The regulatory agency continues to allege that the project's associated crypto offering, XRP, is a security and, therefore, subject to the legal and regulatory implications associated with such assets. Reddit users mint 5 million plus NFT avatars. Social sharing website Reddit saw its users continue to adopt NFTs at a furious pace last year, even though its sales declined immensely. It is estimated that the Polygon-backed initiative has already witnessed the minting of more than 5 million collectibles to date. Moreover, it bears mentioning that these avatars aren't concentrated among high-value NFT collectors, a la whales, and are instead spread out among more than 4 million unique wallets. Lastly, vast majority of the aforementioned minted NFTs have been offered to Reddit's high-value users free of cost. Tiffany enters the crypto sphere. Luxury jewelry and specialty retailer Tiffany & Company announced in August that it was releasing a limited NFT collection called NFTs, each of which would be available for a base price of 30 ETH, approximately $36,000. In all, a total of 250 of these NFTs were produced. Earlier in March, Tiffany purchased an Okapi NFT from Tom Sachs for a reported sum of $380,000. The image has been the company's Twitter profile photo ever since. Positive legislation continued to gain traction. Late in 2022, Brazil's Congress approved a bill seeking to regulate the use of digital currencies for daily payments within its borders, thereby potentially boosting the adoption of crypto within the South American nation. The bill provides legal status to payments made in cryptocurrencies for goods and services but does not grant them status as legal tender. In a somewhat similar vein, Abdelatif Jouari, the governor of Morocco's central bank, Bank Al-Maghrib BAM, announced that his country's key regulatory agencies would soon finalize a comprehensive crypto governance framework. The relevant agencies include the Moroccan Capital Markets Authority and the Supervisory Authority of Insurance and Social Welfare. Jouari revealed that the BAM worked on the document alongside the World Bank and the International Monetary Fund. Other countries that have either tabled favorable regulations in 2022 or are planning to do so in the near future include India, Germany, Australia, and the United Kingdom, among others. Crypto adoption soars across MENA, Asia, and Latin America. According to a study conducted by blockchain analytics firm Chainalysis, the Middle East and North Africa (MENA) region was the fastest-growing market for cryptocurrency adoption last year. Between July 2021 and June 2022, the region received $566 billion in crypto transactions, a rise of nearly 49% from the year prior. To put things into perspective, there were increases of 40% in Europe, 36% across North America, and 35% across Central and South Asia. Similarly, Latin America made up 9.1% of the total crypto value received during 2022, reaching a cumulative total of $562 billion while showcasing a growth of 40% between Q3 2021 and Q3 2022. Also, a total of 4 Latin American countries entered Chainalysis' top crypto adopters list. Lastly, Vietnam currently has the world's highest crypto adoption rate, followed by the Philippines and Ukraine. Other emerging nations that dominated Chainalysis' adoption index in 2022 include India, Brazil, Thailand, and Pakistan. Models and fundamentals: where will Bitcoin price go in 2023? The rapidly evolving cryptocurrency ecosystem is entering a new phase in 2023, with incoming regulations in the US and European Union. Bitcoin had a bumpy ride throughout 2022, along with the rest of the digital asset market. The cryptocurrency began the year exchanging hands around $46,700 and is currently trading over 64% down at $16,560. Consequently, the coin's market capitalization took a tumble from around $900 billion on January 1, 2022 to end the year at around $320 billion. While Bitcoin's drop in price could be attributed to the extraordinary circumstances that the entire cryptocurrency market has been through this year, it is important to reevaluate the 2022 price predictions made by various market entities. One of the most popular predictions was that of analyst Plan B's Bitcoin stock-to-flow (S2F) model. The S2F model predicted BTC to be at nearly $110,000 as of December 2022. The cryptocurrency finished the year trading at almost 85% off target, which raises questions about the validity of the price model. Stock-to-flow models are generally used to price commodities in the traditional markets, as they account for 2 variables related to an asset: stock and flow. Stock refers to the total existing supply of the asset, and flow refers to the new supply of the asset created each year. Antoni Trenchau, co-founder and managing partner of Nexo, a digital asset management platform, shared with Cointelegraph his thoughts on the validity of the S2F prediction model. There are many factors that can influence the price of Bitcoin, including market demand, regulatory changes, and technological developments. The S2F model is one tool that can be used to make projections about the future price of Bitcoin, but it is important to keep in mind that it is based on certain assumptions and is not a definitive guide to the future. Besides S2F, other models have been used to attempt to predict the price of Bitcoin in the near and distant future. Two popular ones are Elliott wave theory and hyperwave theory. While both also find their roots in traditional financial markets, their success in predicting the price of BTC has been relatively limited as well. Price models fail as a new year for Bitcoin ushers in. Considering that Bitcoin only began its journey as an asset just over a decade ago, it is safe to say that the cryptocurrency is still in its nascent stages of price discovery when compared with commodities like gold or silver and other leading technology stocks like Apple and Microsoft. Thus, while there are various BTC price predictions, it is essential to remember the limited availability of cyclical data to factor into these models. Trenchev added that there are many different models and approaches that can be used to try to predict the price of Bitcoin. Some people use technical analysis, which involves studying historical price and volume data to identify patterns and trends. Others use fundamental analysis, which involves evaluating the underlying factors that can affect an asset's demand and supply. No single model or approach is universally considered to be the most reliable for predicting the price of Bitcoin, and it is crucial to consider a range of factors when making any investment decisions. Alex McCurry, CEO and co-founder of blockchain solution provider Solidity.io, agrees with Trenchev, telling Cointelegraph, Bitcoin is a completely unpredictable asset. The only thing one can be certain of when it comes to Bitcoin is the underlying fundamental value of the Bitcoin network and the value it presents to holders and investors. Because of this, one can predict long-term adoption and value in the macroeconomic climate over time, but perfectly timing an exact price is impossible. However, one important aspect could change the trends for the price of Bitcoin utility. Since Bitcoin is not a smart contract-compatible network, the asset's utility has been limited to a payment rail. That is slowly beginning to change, with Bitcoin now finding more utility than ever before, supported by the Lightning Network. Lane is a Layer 2 payment protocol built on top of the Bitcoin network that enables fast, seamless peer-to-peer transactions. It helps improve the scalability of the network enormously. Most recently, Michael Saylor's MicroStrategy announced that it plans to release Lightning Network-powered software and solutions in 2023. MicroStrategy also continues adding Bitcoin to its treasury. Between November 1 and December 21, 2022, the company acquired 2,395 BTC at an average price of $17,181 for a total of $42.8 million. For tax reasons, it sold 704 BTC at $16,776 per coin for a total of $11.8 million on December 22. As a repurchase, the company bought 810 BTC on December 24 for $13.6 million in cash. According to data from Bitcoin Treasuries, this puts the firm's holdings at 132,500 BTC, worth around $2.2 billion. Global investment manager Van Eck released 11 crypto predictions for 2023, among which it claimed that BTC will drop to $10,000, $12,000 in Q1 amid a wave of minor bankruptcies, and will bounce back up to $30,000 in the second half of 2023. McCurry agreed with this prediction, stating, I believe Bitcoin will bounce back in 2023, and I feel that by 2024, Bitcoin will achieve a new all-time high significantly higher than the 2021 peak of $69,000. Trenchev added, it is possible that the price of Bitcoin could rebound to $30,000 in the second half of 2023, but it is also important to keep in mind that the price of Bitcoin is highly volatile and can be affected by a wide range of factors. Derivatives market and BTC price discovery. Despite the unpredictable, volatile nature of Bitcoin's price, the asset's derivatives market is an important indicator of its current and future sentiment. According to data from CoinGlass, the Bitcoin futures market currently has an open interest of over $9 billion. At the same time, the open interest of the Bitcoin options market stands at $3.4 billion, with over 76% of the OI on cryptocurrency derivatives exchange Deribit. Luke Strigers, Chief Commercial Officer of Deribit, spoke with Cointelegraph about what options data for 2023 reveals about the market's price sentiment for Bitcoin. He said, the overall put-call ratio for June 2023 is 0.24, which is rather low. This typically implies bullish sentiment, as there are 3 times more calls outstanding than puts. Max Pain is at $19,000, also showing upside potential. Investors are positioning at the larger strikes, $20,000, $25,000 and $30,000. The premium for the higher strikes is much lower, obviously, so these could be seen as an upside bet, or used for yield generation by call sellers. The max pain price is the price point at which the largest number of options are in loss. Strigers also added that since the FTX implosion, Investors seem to be on the sidelines, waiting for news about the industry, but also macroeconomic news. We have experienced new lows in the implied volatilities, and the short term is currently trading in the low 30s. We're even having dailies seen trading below 30%. At the same time, liquidity is currently lower than normal. Market uncertainty aside, incoming regulations in 2023, namely, the European Union's Markets and Crypto Assets Bill and the United States Loomis-Gillibrand and Warren-Marshall bills, could bring stability to the market, as investors who feel the space is provided with more oversight will likely feel more confident. Otherwise, thanks for watching. If you like the video, so subscribe to my channel for daily crypto updates and comment below if you have any questions. Take care and see you in the next video.